Welcome back, everybody. I am your designated Inquirer. My name is Axel, and this is your market day of 7/29/2020. A lot of things happened today. Let's get to it. The market went up from yesterday's close. Let's figure that out real quick. A total of about 1.2% or 1.3%, depending on where you're looking at, 1.5 to the highest point of the day. It is a little up on after hours trading, reaching what looks like a general resistance point. But apart from where it's at right now and where it moved in the regular part of the day, it's its reaction to the news and what happened during the day that's kind of more important. Given what was said and given the kinds of things that were more expressed during the congressional hearings and the Fed speaking, the market was actually relatively flat. It actually didn't react too well to the news, and it could have reacted a lot better given how it's reacted to this kind of more or less the same news before, which may indicate that a good piece of news or even a moderate piece of news was not enough to necessarily propel the market too much higher compared to earlier these past 3 months since March, which may indicate that there's very limited upside to the market as it stands. It could also be that the market is waiting for tomorrow, where after hours we've got a bigger chunk of the S&P 500 and the NASDAQ reporting that has been more or less responsible for the upside in the market for the past 3 months since March. A good portion of the gains and of the strength of the market has been concentrated around a good portion around these three stocks. So it's going to be a big indicator as to how it's going to be moving forward, whether or not it actually has anything to do with the rest of the economy. That's an important note to always include there, because regardless of how it reported and how the CEOs are talking about the economy, it may not reflect what's actually going on with the overall jobs reports, the decrease in consumer credit, all the things that I have talked about before. So yeah, that's what's happening tomorrow, so we got to look out for that. The Fed or the Federal Reserve indicated that they're going to be keeping their Fed funds rate at basically 0.025% to zero, or at least in that range. Considering that's a pretty tight range, but it's also extremely low. So we're still seeing a booing of the market by the Fed, and not necessarily to any real action that the actual economy is showing, because these are still levels in which the last recession thought it was catastrophic and would be down still a major, more than this. It should be down like maybe still 30 to 40%, but it's not. And it would have taken a lot longer to recover even 20%, but instead it's more than recovered the 20 to 30% that it did drop, and it's already a certain portion of it. In this case, the NASDAQ has gone up an extra like 20% on top of that, which this is why I believe that there's a giant disconnect between what is currently happening in the economy and what's going on in the stock market. These things are not matching up. Apart from all of these things, what else did I want to talk about today? We can kind of sometimes you can make a comparison with certain indexes. In this case, what we can do today is make a comparison against the Vix. The reason I want to do this is because generally the Vix and the movement of the stock market can move in tandem and or opposite of each other. Generally, the VIX and the regular market will move in opposite to each other. So as the VIX goes up, the S&P or the Dow Jones or the Nasdaq will move down. As you can kind of see around this area right here, where this is moving up, but at the same time this is kind of moving down. And sometimes the rate at which one goes up in response to a movement in the other will vary. So in a way, there is a certain amount of sensitivity assigned to how the depending on the movement in the VIX, the regular market will advance or decline a certain amount per point of movement. This depending on physics or any other like industry or field of study, this would be called like a sensitivity to or a reaction to a certain stimulus. The VIX here being the stimulus and it being a gauge of fear, and your S&P and or market index being the resultant or having a reaction to that stimulus. So sometimes the sensitivity can go up and or down, but what I've recently been seeing is that the lower the VIX gets, the more sensitive it can become to a rise in the VIX, meaning that the lower it is, a small point movement up will generally generate a bigger movement down. And a movement down won't necessarily mean an equal movement up. Whereas this movement right here ended up creating, or could be, a correlation to this movement down, but this movement down did not mean an equal movement up. Because this is rather small, this is rather large, and a continuation of is what resulted in a bigger move up. Like, you basically had to have like a 2 or almost 3 times movement down to a movement up to get the same type of action. That's what I mean by sensitivity. It's more sensitive to a movement going up than down at these current levels. You can say generally that this has always been the case, but as it stands right now, that's what it looks like to me. Yeah, and or something that, you know, you can possibly kind of trade against, make a strategy around, or to just, you know, keep tabs on while you're trading if you decide to trade off of that kind of information, should you decide. Yeah, it's just an observation, and something that I've been noticing recently. I don't know exactly how to use it in trading or to make an actual strategy around it, because either one is a reaction to the other, or vice versa. Yeah, that's basically, that's the result of my thoughts at the moment. Okay, now what else happened today? I think that's pretty much it. If we go to the daily chart to see whether or not we've broken out of this trading range and or not, we still haven't broken down to this low right here, which we need to if we're going to be continuing the move lower to possibly a break in trend like what happened here, or if we have basically a drop and a continuation of this general bull market that we've been on since March. Yeah, this is basically where we're at. If it does continue to go down, if it does break to the lower and then decide to crash, it would be a much more normal type of crash than what we had here, where it really didn't take a lot for it to just roll over and proceed to die. Yeah. Generally, you can have a drop or a correction of a few percent. In this case, of 22% over a period of time, and it's a lot more gradual. You can have even still more up days than down days, quote unquote, but your opening is considerably lower, and the direction can still be negative. It can be something more like this versus something like that, or what happened in March at the beginning of February or end of February into March, where we've got this sort of decline. Like it may not be like this. It may be more controlled. It could be more, in a way, insidious, because it could just take more time for it to happen. We don't know. We don't know what that looks like. I don't know what that looks like. What else happened? Gold reached a new high earlier today while the Fed was speaking about basically maintaining that they're going to be still printing even more money. And Bitcoin has been slowly rising to try and meet the high that it established earlier at 11,540. It is currently at 11,300. It's not too far away. The second it breaks that, look to see it become a little more volatile and probably reach new highs here. It doesn't seem too much of a stretch. If we take a look here, it doesn't seem too much of a stretch for it to possibly, if it continues on this trend and it continues to hit new highs, to challenge, depending on whether or not it challenges and or beats this high right here, we could see 1,500 on Bitcoin relatively soon. It doesn't seem too much of a stretch. But compared to any other gold rush that we've seen in history, generally, those that make out with more money tend to be the suppliers that serve the gold rush, and not necessarily the miners in and of themselves. So companies like Nvidia, AMD, people that can establish an economy around it, people that can process payments in Bitcoin, people that can, do stuff like that, will generally see more of the benefit of an increased price in Bitcoin. So yeah, that's the news of the day. Those are my thoughts, and until next time, I will catch you guys later. Stay safe, stay healthy, take care, bye.